What's up everyone, my name is Anthony, and in this video I'm going to do some technical analysis on the S&P 500, the NASDAQ, as well as AMC, Apple, and Tesla. So to start off, we've had a really good week so far. We've pushed off a lot from the buying zones, and as you know in the people in the Discord, we've been making some really good profits on SPY calls, as we held calls throughout this entirety of upside, and we doubled down at this position right here, and then we rode to the upside all the way up here and took profits right at the top. So overall, it looks really good. And I'll show you some clips of my Robinhood account that I'm recently starting, just for the fun of these calls in the Discord. And keep in mind that the gains are just from a $5,000 investment. So just to summarize how those plays went, pretty much we entered some calls, a very low leverage play around this zone, and we're honestly down on the calls when it gapped down. But then we know that because of wave theory, this is a wave 4, and that we're going to push upwards for a wave 5. So we were waiting for this confirmation of an acceleration gap up for the wave 3. And right when it did that, we tripled down on the position and rode the calls all the way up to the upside. And because of wave theory, we can identify where the top will be around. And we did that, and we took profits right around the 437 area. So overall, really solid play, and we're out of the position now, and right now we're expecting a wave 4 to hit. So if I zoom back to the 15-minute time frame, let's go into some of the technical analysis of what to expect over the next week or so. So first of all, we finished this wave 3 up here in golden yellow, and this was what we were targeting as for the upside. And we had an original price target of 437 to 438, and we hit this right exactly, pretty much right on the dot, and we took profits right at this area. So now we're working on this wave 4 downwards, and we've gotten some of the downside today in the trading day. So as you can see, the S&P 500 is down 0.34%, and luckily we exited the calls yesterday, so we didn't have to tank these on the downside. But so when we look at what the structure is for the wave 4, there's really no way to tell right now what kind of structure it's going to take, because it can take many forms. It can take a complex correction, a zigzag, a flat, just many ways of just stalling out price action and bringing the index down to lower levels. However, so I'm waiting just a little bit longer to see what kind of price action this wave 4 will take, and then you can try to play puts for this downside. And I'm predicting that we might bottom out around the 0.382 retracement levels of this wave 3 in golden yellow, or also at the 0.5 areas, which would be at 426. So these are targets for a bounce, and then we'll push upwards for a wave 5 right here. And then we'll come down for the bear markets afterwards. So if we look at the really broad term wave count, so this is on the SPX, which is just the S&P 500, we can zoom out over the past year or so and see what the wave count is. So we have a wave 1 up, wave 2 down, wave 3 up, flat correction for the wave 4, and now we're working on this extended wave 5. And this is very typical for markets when they're trying to reach a bull market top. They will keep extending these wave 5s, and that's what you're seeing exactly right here. So we have a wave 1, 2, 3, 4, 5 up, and then within this wave 5 we're subdividing it as well, so extending it further, so 1, 2, 3, 4, 5, and then we're working on another extension of this wave 5, so a 1, 2, 3, 4, 5 is what we're working on right now. So this is just the broader term outlook of the S&P 500. In terms of what we can expect over the next week or so, expect this retracement for the wave 4, and then we'll push upwards for the wave 5, and this will likely be in an ending diagonal sort of pattern, but we'll get to that exactly when we get to the bounce from the wave 4. So that's going to be it for the S&P 500. Now let's move on to the NASDAQ, and this is reflected by here in the triple Qs. So if we zoom out a little bit on price action, we see another impulsive wave forming for the wave 5, and we're forming a nested sort of wave 5s here, and that will, after we finish this area, we're going to come down for the bear markets as well, just like in the S&P 500. So if we break down the wave count, we have a wave 1 up, wave 2 down, wave 3 up currently working on, and then now we're working on this wave 4. So what it seems like here that we might be forming is some kind of expanded flat correction. So this will take some price action like this. And overall, you don't want to trade this type of area right now because you haven't really confirmed anything yet. We're just having this really choppy movement in the index. So as you can see, about a week ago, we were sitting right exactly at the same zone. So even if you took a bullish or bearish position, this would be down at the moment because of this really choppy up and down price action. So I would avoid trading this index at the moment. I would wait for the wave 4 dip and then buy calls in for the wave 5, just like you can do for the S&P 500 right here. So overall, NASDAQ and the SPY are kind of following the same pattern, roughly the same price action, just that we're going to experience some choppiness because both of these indexes are going to go under wave 4s. So now let's move on to AMC. So this is kind of like the reflector for the meme index sector of the stock market. And basically, if you expect AMC to have upside, the other meme stocks will follow as well. So here's the wave count, and we have a similar impulsive structure forming. So wave 1, 2, 3, currently working on this wave 4, and then we should push up for a wave 5 in the future, and then correct in an ABC sort of fashion to get rid of all this overpriced value in the stock. But for now, there is still more upside. It seems like I'm just waiting. It's sitting right at, kind of at the top areas of my buy zone, but I haven't entered any bullish position yet because I'm waiting for that proof of life bounce within this buy zone. So we did get originally a pretty strong bounce right here off the buy zone, and it was pretty decent, like 25% bounce, but then we sold off immediately right after. So I'm waiting for some sort of evidence of an impulsive structure to the upside, such as like that will look like something like this, like a 1, 2, 3, 4, 5. And you don't have to get in right at the bottom. You can wait for it to show that it has this impulsive structure. For example, if it dips for a wave 2 right here and then is able to bounce upwards for wave 3, you can buy in to this wave 3 at the bottom right here and then catch a lot of the upside. So that's what I'm looking for in this meme stock. And I actually think that buying shares at these levels is not a bad idea, especially as we get to these wave 3, 4 retracement zones. So anywhere from maybe 36 to, if it goes down to 26, but that's unlikely. If it does go down to anywhere of these levels, I would recommend getting a stock position, not an option position yet, because the implied volatility is still very high. But overall, we should push upwards for wave 5 in the future. So a stock position makes sense to me, and that could get some really good upside up to these levels. So even I know it's unlikely, but maybe an 81% just based on fib levels, fib extension levels off this wave 1. We could get a pretty strong push to the upside in the future, but as of now, I'm just waiting for the proof that it can bounce upwards in an impulsive structure. So holding on to AMC, but still bullish. Now, next on the list is Apple. And the reason why I want to go over Apple is because I believe this is a really strong reflector of what is going on in the broader markets for a lot of stocks. So because of the markets have been pretty bullish, so as you can see, we've had some good upside over here. Some of the main tech stocks and just main market cap stocks are up. And I want to bring up that this could be forming a complex correction structure. So this is kind of like a warning. So just to break down the wave count of Apple, we have a wave 1 up, a wave 2 down, a wave 3 up here, and then a triangle for a wave 4 right down here. So this forms an A, B, C, D, E. And then we pushed upwards for a wave 5. And then we started the first leg down for the A wave, and then a B wave to the upside, a 3-wave move, so A, B, C for the B wave. And then we pushed downwards for the wave C, which kind of got truncated here, which is normal for large market cap stocks that are generally bullish. So that, and this whole structure would form a W wave. And the W is just a 3-wave structure. So this ABC forms here, and then we push upwards for this X wave. And this X wave is going to be known as a failed impulse wave. It hasn't yet been confirmed because we want to see some failure to push through maybe these previous all-time highs. We need to see the Apple have struggled to push upwards for now, and then we can confirm that this is an X wave, and then we'll be coming down for a Y wave in the future. And this Y wave will similarly form some kind of ABC structure. And this is known as a complex correction. And the reason why this specific price action does look non-impulsive is because, as you can see from the 1-day time frame, this move to the upside doesn't look impulsive. It's just a straight up increase. And whenever you have just green candles in a row, typically this is not really correlated to an impulsive structure. When you have an impulsive structure like this, so let's look at this third wave. You can clearly see that there's dips, and there's like occasional dips along the uptrend, and that's what an impulsive structure is. You have that wave 1 up, 2 down, 3 up, 4 down, 5 up. You have these kind of, and even within this wave 5, you can see that there's a 1, 2, 3, 4, 5, like just dips within the uptrend. Whereas here, there's not really any major dips. So that kind of hints at that this might be an X wave. So overall, I do not think that taking a bullish position in Apple at these levels is a good idea. We could push up a little bit higher for the X wave. It just all depends on the market conditions. And then we'll push downwards for that wave Y. But I'll keep updated the stock because other stocks are behaving in a similar fashion. So we also have Tesla that's behaving just like this. So just like Apple, we have a wave 1 up, wave 2 down, wave 3 up, wave 4 down, and then wave 5 up. And then we're working on, after we finish this top right here around 900, we came impulsively down for an A wave. So 1, 2, 3, 4, 5, then up for a B wave in 3 waves. So A, B, C for that B wave. And now we worked impulsively downwards for that C wave. So 1, 2, 3, 4, 5 for the C wave. And just like Apple, this ABC forms a W wave as the first leg of this complex correction. And now we're working on the X wave to the upside. And Tesla over here really kind of shows that failed impulsive wave structure, as we can see from the price action, just on the 1 hour time frame. This price action over here isn't really impulsive. I know there's a lot of dips along the uptrend, but first of all, this area right here goes through this area. If you were to see a true impulsive structure, it would look more something like going up further and then failing to retrace not this much, and within this territory, you would kind of push up here, and then this would form your 1, 2, 3, 4, 5 structure. Whereas over here, we're kind of getting some weird like ABC. You kind of treat it as like an ABC structure to the upside. And whenever you see this kind of price action, it's just from looking at multiple charts over and over again. This does not really hint at an impulsive wave. Looks very clearly like an X wave. And this is not to say that there's more upside. We could push upwards to some of these price targets, maybe to the top of the B wave, and then we would fall down for an ABC for that Y wave, just to finish off that complex correction. And these complex corrections can last multiple years, they can last multiple months, it depends on the market conditions, and that's why we keep track of the S&P 500 and the NASDAQ, just to keep these stocks in mind. So overall, I'm not very bullish on any of these large market cap stocks. I do think that they're mostly all doing complex corrections. And with the market conditions pointing that we're going to have bear market tops right here, I would not get into a bullish position at the moment in either of these stocks. And this is applicable for any type of price action that has large market caps, such as over here, we have like PayPal, Salesforce, or just anything down here, even Shopify. Disney is also on that list of large market cap stocks. They should all be doing complex corrections and pushing upwards for an X wave, and then this would fail as an impulse wave and then come down for a Y wave. So that's just an update on a lot of individual stocks as well as the broader markets. As always, I will post any updates in the Discord as well as here in YouTube. So thank you so much for watching, and let me know if you have any questions in the comment section, or just direct message me or type it in the Discord, and I'll see you in the next video.